Alright guys, so the financial doom is coming and let's talk about the currency war today. Now behind the scenes of crazy US tariffs, there's one underlying current that will determine who will win and who will lose. Now the US endgame is to build up the export economy. Bessent has said many times that China has to sell less to the world. He wants Beijing to produce less and for the US to manufacture more. But note this critical portion, the US wants to crush Chinese production to help push up their own.
China needs to change. The country knows it needs to change. Everyone knows it needs to change, and we want to help it change because we need rebalancing too. China can start by moving its economy away from export overcapacity and towards supporting its own consumers and domestic demand. Such a shift would help with global rebalancing that the world desperately needs.
Now, the US game plan is to rebalance China, right? Rebalance China to basically close down Chinese factories while getting Chinese consumers to buy more stuff. Now, for Bessent, this is a zero-sum game, and at the heart of this, they are waging a currency war with China. Now, he wants to make Chinese exports less competitive to the world, but he can't affect Chinese supply chains. So the only option left was to give Beijing an ultimatum. Now, Bessent gave Beijing a warning. They should not attempt to devalue their exchange rate in retaliation, basically for China to maintain a stronger RMB and let the US dollar weaken to help US exports. But here's the big problem. The US has made a very big miscalculation when they decided to hike their China tariffs to 145%. This means cutting away a ton of cheap intermediate goods and finished products to the US. So now the cost of production has risen. In addition to that, the US is about to dive headlong into a supply chain crisis. The American consumer is going to face a big price shock.
The Flexport CEO joined us earlier in the week and he said ocean freight is down 60% from China. When do we see 100%?
It depends on how long this goes. We heard the reports overnight through Bloomberg that the folks in China are thinking about talking. What does that mean? Okay, great, but we've got to get a move on here. The other thing is that retailers are saying we've got about 5 to 7 weeks of normal inventory in the country right now. Then we start to see spot shortages if it goes on much beyond this.
So goods coming from China are down by 60%, and we are moving closer towards a total shutdown, 5 to 7 weeks before the US consumer faces either zero volumes or much higher prices. And this is the problem with the US trade policy and their monetary policy. You can't do them in isolation. The blowback effects of the tariffs are sinking Bessent's plan of a weaker US dollar saving the day. It's not going to happen. Weakening the dollar is a strategy for exporting more to the world. That might be true. Foreign consumers can buy more using their local currency, but not when the dollar is outright collapsing together with US supply chains. There's a reason why traders in the market are betting big against the dollar, and that's despite the recovery in the US stock market. We have over $17 billion shorting the dollar because the fundamentals are just downright horrible. The US economy is halfway towards a recession. A supply shock is coming, and Bessent himself, he is begging the Federal Reserve to cut rates. And all these factors add enormous pressure to a weaker dollar. It's a structural risk that could last for many months, maybe many years, unless a U-turn happens. And we shouldn't hold our breath for that. The collapsing dollar is turning out to be more of a drag than the boon to the US economy. But for Beijing, the collapsing dollar amid a weak US economy is a godsend for them. It gives them a ton of breathing room. This is evident when we compare the Chinese yuan strength versus the dollar index. Things are very different from the First Trade War. During the First Trade War, the Chinese yuan weakened by an astounding 14.5% from 6.4 to the dollar to an incredible 7.2. China's economy was much more vulnerable back then. During the same period, the dollar increased by 12%, so that made US imports cheaper. Without a doubt, the US had an edge in the First Trade War, at least in the initial phase. China was forced to devalue their currency, which weakens their own domestic consumption capability as well. But that was back in 2018. Remember China's dilemma today. They need to maintain exports to the world, so keeping the currency weak enough is necessary. However, China can't let it collapse, or boosting domestic spending would also be very hard. But thanks to the world abandoning the US, this makes China's job infinitely easier. The reserve currency framework is backfiring on Bessent's grand plan. In today's trade war, the tables have turned. China only devalued their currency by 3.2% to maintain competitive exports. Their trade surplus is still at a record high of over $1 trillion a year. But the dollar is down by almost 10%. Instead of going up like before, it is crashing down to earth. And because US supply chains aren't fleshed out, a collapsing dollar makes all industrial costs fly up. All the intermediate inputs like steel, rare earths, and electronics, they now cost more. And remember how crazy the effective tariff rate is in the US. It's more than 20%. And this offsets more than the 10% crash in the dollar. So now China has a lot of room to play with the RMB versus the cards Bessent has. The US and China are playing a very simple currency game. Who can devalue our currency more without destroying our economy first? And without a doubt, Beijing has a full house. Bessent, on the other hand, he's playing with a pair of trees and other cards. They're all jokers. It's unwinnable because the supply chain issue hasn't been solved yet. It gets even crazier when the White House can't even understand the basics of global trade. Nothing Trump says in the next 40 seconds makes any sense at all.
You're talking about this transition cost. How long should people expect that transition to last, Mr. President?
I can't tell you that. I can tell you that we're making a lot of money. We're doing great. Again, we're losing more than $5 billion a day. $5 billion a day. You don't talk about that. And right now, we're going to be at a point very soon where we're making money every day. Look,
how soon?
We were losing hundreds of billions of dollars with China. Now we're essentially not doing business with China. Therefore, we're saving hundreds of billions of dollars. Very simple.
The US is losing hundreds of billions doing business with China. Okay, great. Now all trade is gone. Consumers will suffer higher prices, and US factories are even more uncompetitive. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. Furthermore, we have the US-China yield spread narrowing, which is a very big deal. In fact, it's a big game changer in this entire trade war. Because the yield spread is dropping, investors stop dumping the RMB for the dollar. In fact, the reverse is happening. The dollar will get dumped further, allowing the RMB to strengthen even more. And this now gives Beijing breathing room for more policy action. They can continue to cut rates or borrow money to flood their economy with yuan. All that can be done without crashing the currency. Because of the dollar falling, the central government in China can confidently execute a controlled devaluation of the RMB plus conduct stimulus. So their exports can stay competitive, domestic consumption can grow, all without causing an inflation shock. And thanks to the collapsing dollar, Bessent's ultimatum is backfiring. China will also do all they can to keep the dollar weak. Now, Beijing is not powerless in this fight. The Achilles heel of the US, which is its financial market, is helping Beijing to power through the trade war. And there's nothing Bessent can do because it's the global markets at work. It's basically a run on the entire US economy. China's game plan is very simple. Gently nudge the dollar even lower and they don't have to do much. Just watch the fireworks and do some defensive measures of your own. Firstly, the Federal Reserve will have to lower rates and that will do the majority of the heavy lifting. By allowing Trump's tariffs to cut away vital imports from China, the US economy will weaken to the point of a recession. Powell will be forced to cut rates, and that will send the dollar lower as well. Step 2 and 3, they are very simple. Ensure the Chinese yuan moves gradually and within a trading range. No need for aggressive action. Supporting the Chinese stock market is also necessary to draw money away from Wall Street all the way to Shanghai. And the final tactic is something we are all familiar with: dumping US assets like stocks and bonds, flood the market with more supply to bring down their prices. And all these moves creates the incentive to drive the dollar down even further. Trump and Bessent really didn't see this one coming. They launched the trade war without covering their bases. They didn't realize the world would push back, and their greatest asset, the dollar, is now their greatest weakness. And if you're in the US, the last thing you want to do is to escalate the trade war, which is what Washington is doing. They are digging a deeper grave. It's simply bizarre. The level of poor decision making there is breathtaking. And according to the Telegraph, Peter Navarro, Ron Barra's best friend, has given a grim warning to the UK. He is telling the British to cut trading ties and economic relations with the Chinese. And let's be real, it won't work. Even the Japanese are highly resistant to joining the US coalition. There's no way the British can afford to decouple with China, but Navarro is still trying to sell the rules. He told the UK to resist becoming dumping grounds for Chinese products meant for the US, to basically close off their doors to affordable Chinese imports. He also gave a crazy warning: beware of authoritarian, mercantilist regimes bearing gifts. But is the pot calling the kettle black? The US trade war is being waged on executive emergency orders and not through Congress. The US is clearly moving towards a mercantilist regime. There's also another big difference. Unlike China that can provide rewards like investment and technology, the US comes bearing punishments. China offers carrots. The US offers the tariff stick. There's a big difference here. Navarro is truly living in an alternate universe. Not even the UK is that short-sighted to cut away China and trade. It will most definitely cripple the British economy long-term as well. Now, on the surface, it looks like the US has the advantage. China accounts for only 4% of UK exports and 7% of their imports in 2023. But cutting away the Chinese economy will be a disaster. Not only do you get more dependent on the United States, the future of technology and a growing consumer class will get cut away. The UK is well behind in the EV race, and they need Chinese imports to lower their own cost of production as well. It's just not feasible. The whole situation gets even crazier. Now, we are really entering the deepest part of the Twilight Zone. So hang tight for this one, it's a Looney Tunes moment. Navarro told the UK they are a compliant servant of Communist China, that the Chinese economy is a vampire that is draining America, and that they are now looking to drain the British as well. Now, this is the very definition of unhinged. I highly doubt that even the Brits will fall to this substandard level of fear-mongering. This is bargain basement level stuff. So this is where we are at. There's now enormous pressure on the British to fold. It really isn't about reciprocal tariffs anymore. It's more about containing China. Navarro wants the British to compromise on their food safety standards to import more US farm products. The non-tariff barriers have to come down, or the US won't lower their tariffs. We are now in an epic waiting game. Many countries are waiting for China to make a move first, because if the US caves to China, then all other tariff barriers will have to drop down as well. Beijing is waiting for the US economy to crack. They are just hanging back, waiting for the US consumer to collapse. A supply crisis isn't far away, and even if you discount trade with China, all products entering the US will cost much more. And Trump still believes exporters eat the tariff even today. It's very bizarre, but it tells us we are still headed, we are still on course for horrible collision.
What people don't understand is, and this is a lot, the country eats the tariff, the company eats the tariff, and it's not passed along at all.
Well, some CEOs are saying they're going to have to pass it on. So how do you deal with those CEOs?
But the company,
how do you deal with those CEOs?
China is eating the tariffs right now.
What do you say to those CEOs who are saying we might have to pass this on to the consumer?
Well, they say that because maybe it's to their advantage to say it.
Will you punish them?
No, because you know what? I want them to build plants in the United States. That way they don't have any tariffs.
Reality is going to catch up sooner or later. Trump might think he's winning, but that's not the case. Once you impose tariffs to bring in companies, you can never lower them. Just that alone will mean elevated prices in the US versus the rest of the world. Trade with the US will slow down, and that won't be good for the dollar. So hang tight, guys. This is about to get very messy very soon. But as always, let me know what you think. Does Bessent have another plan to contain China? And does Beijing need to act now or just hang back, sit back, and wait? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these insane times.